Hello and welcome back to Investia Global. My name is David, and in this episode we're going to go step by step on our advanced trend following trading strategy that will change your trading completely. Let's see what are the key things we'll cover on this episode. Firstly, we'll learn advanced trend identification method, where we'll learn 1. Using price action to identify a trend, and 2. Using advanced price action to mark key highs and lows on the charts. Secondly, we'll share our advanced trend trading strategy, where we'll learn 1. Using price action to note our entry areas, and 2. Using price action to execute our trades. Thirdly and finally, we'll see market trade examples, where we'll be 1. Using price action to mark key entry areas on the markets, and 2. How to execute trades on the markets. Let's start with how to identify an uptrend. On an ideal uptrend, we want price to shoot up and make a high, then retrace back and make a low. After that, we want price to shoot up again, and this time we want price to break the previous market structure and create a high higher than the previous high. Then we want price to make a retracement, but this time making a low that is higher than the previous low. Then we want price to continue in this pattern on our uptrend, creating an impulsive move that will break our previous market structure and making a high higher than the previous high, plus we want the retracement move to make a low higher than the previous low. Only then will we confirm that we're on an uptrend, as price will be making higher highs and lower highs. Now here are some key points to note. 1. On an uptrend, price makes a series of higher highs and higher lows. 2. In order for a higher high to be identified, price must create a high higher than the previous high. Third and lastly, the new low must be higher than the previous low. Let's see how we can identify all these concepts on a chart. This is Euro USD 4 hours chart, and as we can see, price impulse and made a high. Then price retraced and made a low. Then price flew and made a higher high. Then price retraced and made a lower high. After that, price made a higher high, and another higher high after that. Then price made a lower high, and price made a higher high, and a lower high, and finally another higher high. And as you can see, on an uptrend, price made higher highs and lower highs repeatedly, and that's why we had this uptrend. Now next, let's see how to identify a downtrend. So on a downtrend, it's just the opposite. Price makes a low impulsive move, then retraces up. Then price makes another impulsive move down again, breaking the previous market structure and creating a low lower than the previous low. Then price retraces back up, but this time makes a high lower than the previous high. Next, we want price to repeat this pattern of making lows lower than the previous low and highs lower than the previous high. Here are some of the key points to consider. 1. On a downtrend, price should make a series of lower lows and lower highs. 2. In order for a lower low to be identified, price must create a low lower than the previous low. Third and lastly, the new high must be lower than the previous high. Let's see how we can identify a downtrend on a chart. This is a gold chart, and as you can see, price started with a high. Then price dropped and made a low. After that, price retraced up, making a high lower than the previous high. Then price dropped again and made a low lower than the previous low. And as you can see, price created lower highs and lower lows repeatedly, creating a downtrend in the process. Now let's see how we can trade an uptrend change. So as you can see, we're on an uptrend, as price is breaking previous market structure and creating new higher highs and lower highs. Now, as we previously mentioned multiple times, on an uptrend, price makes higher highs and higher lows. But on this retracement move, we can see price broke market structure, creating a low lower than the previous higher low. At this point, price action signed to us that now we're changing direction, and we should prepare for more and more moves going down. What we'll do to minimize our risk is to mark our last higher low that is now broken and wait for price to retrace back to that point, so we may take our short positions and wait for price to drop even more. Now let's see how it looks on the charts. So this is a Euro-dollar 4 hours chart, and as you can see, price had been creating higher lows and higher highs. And as you can see at this point right here, price broke the market structure and higher low, creating a new lower low instead of a higher low. We'll mark our broken structure, which is also our last higher low, and we'll wait for price to retrace back to this point and take our short trades. Lastly, let's how we can trade a downtrend change. And as we can see, price is dropping down, making lower lows before retracing back up and making lower highs. And then price impulses, once again breaking market structure and creating lower lows before retracing back up again. And at this retracement push up, we can see price broke the market structure and made a high higher than the previous lower high. Next, we'll mark our broken structure and wait for price to retrace back to it, and only then will we take our long positions. Let's see how this looks on the charts. This is the New Zealand Canadian dollar 4 hours chart, and as you can see, we have price making lower highs and lower lows. And at this point right here, price broke structure and our lower high, creating a higher high. As we saw in our previous example, we shall mark our last lower high and wait for price to retrace here. And as you can see, price retraced to our entry zone before shooting up. And that's all we got for you on this episode. My name is David. Thanks for watching, and I'll see you on the next one.